Hi guys, Randy Martin here. Decided to do a bit of a walk and talk today in the forest. And I've got my German Shepherd with me. You might catch a glimpse of her as she runs by. She's from the crackhead clan of German Shepherds. Anyway, today we're going to talk about gold and silver and maybe platinum or a few other things. Sorry if my camera work is a bit shoddy. So I get asked a lot if I invest in or if I acquire gold and silver as a physical commodity or as certificates, etc. And my answer is yes. I do have gold, silver, and platinum. I don't have some of the more rare ones like iridium and stuff like that. But I do have gold and silver. Now they represent about 3% maybe in my portfolio total, and I rarely liquidate them. The reason I have gold and silver is really because they usually have worth. Their value is fairly stable. They're worth something no matter what, and just about no matter where in the world. So I have some. Now, as an investment, I don't see them as particularly good. They don't do that well. You know, yes, gold has gone up, but if you look at it for the last 100 years, if I had $1 million worth of gold in 1924, just before the market crash, I'd have probably about 10 million worth today. Whereas if you compare that to $1 million worth of Dow Jones stock, you know, any sort of industrial average or just regular good old stock that survived, I'd probably have close to 2.2 billion. So those are the differences in growth. Gold and silver tend to, you know, pace inflation and don't really beat it all that much. You know, 2.3% I think is the average growth rate for the last 100 years for gold. Whereas the stocks, the Dow Jones Industrial Average is 8% year over year. So if you look at that, the growth is much, much higher. Further, well, gold doesn't produce value. You know, it's a static asset. It does not add or contribute anything. You have 1 ounce of it in your safe, it's going to be 1 ounce of it later. So as opposed to that, when you look at companies that produce value, the company itself or the stock you own for the company remains the same. But every year, hopefully the company grows, the stock price goes up, or you get dividends for it, but retain the actual company. Whereas for the ounce of gold, well, you'd have to sell it. And then, yeah, you have cash, but you don't have the investment anymore. You don't have the gold. So that's my take on gold and silver in a short spiel. I do have some. They do particularly well in recessions, or really they're well insulated against recessions. They won't increase. They're not going to be a great asset to own, but they will hold a value, and that's a good thing. And you'll see investors flock to gold and silver and other stuff like that during economic uncertainty or market volatility, if you want to call it that, because it has a very stable value. So people with a lot of money to move will shift a portion of their portfolio. They'll shift a portion of their portfolio into gold and into silver temporarily while they wait for market events to develop, and then they can make better choices for what to do as they convert it back to cash and into stocks later. Anyway, that's it for now. Thanks for watching.